Well, stocks fell broadly in morning trading on Wall Street today before rebounding this afternoon. So joining us tonight to talk about some of the recent uncertainty in the stock market is Matt Farkas, a financial advisor at St. Germain Investments in Springfield. Matt, we thank you for being here with us tonight.
Thanks for having me.
So I want to just start with this. Very simply, can you explain what's happening on Wall Street and how it might impact average Americans?
Sure. So your lead-in story was a perfect segue to this segment because inflation is really on the mind of not only consumers but investors as well. And investors are trying to understand what's going to be coming next with inflation. And on top of that, there are a couple of other really big picture issues that are going on in the marketplace right now, and that's trying to anticipate Federal Reserve policy. And that simply put is just interest rate policy in the United States. The Federal Reserve controls short-term interest rates, and it's widely expected that the Fed will continue to raise interest rates through the bulk of this year, changing the math for all investments. Because interest rates can really be thought of as the price of money. And as you change the price of money, that really impacts all asset classes. And so it's not terribly surprising that investors are seeing a lot of volatility as they try to reposition portfolios. And typically, volatility tends to lead to more volatility. And so we're going through a period right now where investors are really trying to grapple with a lot of new information. And as a result, we're seeing a lot of volatility in the market.
And so like you mentioned, the Fed's plan to raise interest rates, could that possibly trigger a recession?
It's certainly possible. Historically, when the Fed guides up interest rates as they're going to be doing, that does increase the probability of a recession. But that said, near term, I don't see that as a high probability. The U.S. economy is in reasonably good shape. The job market is very strong. We're seeing wage gains in a way that we haven't seen in a long time. And the average consumer, their personal balance sheet is in pretty good financial order. In other words, there's not a lot of debt for the average person. And so when people are working, earning more money, they tend to spend more money. And the U.S. economy is primarily, the economic activity is primarily from consumer spending. And so with the consumers in pretty good shape and they're working, the outlook for the U.S. economy is pretty good.
All right, Matt Farkas with St. Germain Investments. He's going to be joining us throughout the evening to answer more questions on 22 News at 5:30 and 6.
Okay, so joining us now to discuss how Wall Street is reacting to all of this is Matt Farkas, a financial advisor at St. Germain Investments in Springfield. Hey, Matt, thank you for being here tonight.
Thanks for having me.
All right, so we want to start by asking you about interest rates. The Federal Reserve is predicted to raise rates by 0.5%. So what impact will this have on inflation?
So the Federal Reserve has a pretty effective toolkit to deal with inflation, but it's a blunt instrument and it does take some time to work. But that tool is raising interest rates. And the Fed raised interest rates in March, and it's widely expected that was just the beginning of it. It's widely expected that they'll raise 0.5% in May and likely another 0.5% in June, and likely going to continue through the rest of the year. And so that's a big change in interest rates in a relatively short amount of time, and it's likely that it will have an impact on inflation. But traditionally, those tools, it does take some time before you start to see it in prices.
And for those with money in the stock market, what can they expect in the coming weeks with everything that's, of course, happening in China and with the Federal Reserve System?
Markets are trying to deal with a lot. We're dealing with the Chinese situation. We're dealing with heightened inflation. We're dealing with a big change in the Federal Reserve policy. And as investors try to grapple with these big picture issues, it does lead to some volatility. And volatility tends to lead to more volatility. And so I do expect over the next few weeks that, and really for the foreseeable future here, that we should have some volatility in markets. But that said, if you have a good, sound financial plan, don't let the volatility scare you. Volatility can be your friend if you're not currently investing. And if the market does happen to sell off, you can use those opportunities to buy investments on sale, if you will.
All right, Matt. Hey, thank you. And Matt will be joining us once again to answer more questions on 22 News at 6.
All right, another roller coaster of a day on Wall Street with stocks erasing their steep losses from this morning. And joining us tonight to talk about what this means for your investments is Matt Farkas, a financial advisor at St. Germain Investments in Springfield. Matt, we thank you for being on the program.
Glad to be here.
All right, so let's talk first about what happened on Wall Street today and what the reason behind the drop and then the bounce back was.
Very volatile day. The Dow was down nearly 500 points at its low and finished up over 200. So that's a pretty big swing intraday. In terms of why that happened, there's really not a good obvious thing to point to for this. We're just in a volatile period, and sometimes markets overreact. The tail end of last week was a particularly tough time for the stock market. Today started out in a similar fashion, but there was a group of investors that were essentially identifying investments on sale and some money put to work in pushing up stock prices by the end of the day.
Yeah, and so a lot of anxiety right now. What kind of advice are you giving your clients who may be concerned about their investments?
That's a great question. First off, I think people need to realize there's no perfect investment plan. The best investment plan is one that you can stick with. And at St. Germain, we really work hard to get to know our clients and get to set up an investment plan for them that really matches their personality. And we try to do it in a way that minimizes risks to meet their goals. And that typically involves a well-diversified portfolio, getting to know their personal situation, and making sure they have adequate cash reserves to ride out tough market periods. So it really comes down to adequate planning.
Yeah, and so lastly, I want to talk about oil prices, which are back down below $100 a barrel. So do you see that price continuing to drop and maybe translating into lower gas prices?
Another great question, one that we get often. I would point to the markets and what markets are expecting. The markets have contracts available. We can accept delivery of oil in the future. And right now the markets are pricing out, the further you go out in time accepting that delivery, the lower the oil price gets. So today, if you were to buy an oil contract to accept delivery for oil in a couple of years, that would be about $75 a barrel. And today's current price is about $100. So markets are anticipating that as time goes on, markets heal, hopefully the situation in Ukraine resolves itself quickly. And all those things are pointing to indication that oil prices should be lower in the future. But that said, I think we need to acknowledge that some humility when forecasting things like that, and sometimes things happen in life that can boost up oil prices. And I point to Ukraine as an example of that really caused another leg up in oil prices. And that's not anything that anyone was really predicting coming into the year.
Okay, Matt Farkas from St. Germain Investments. As always, we thank you for your insight.
Thank you.